Hello guys, welcome back. We're going to be continuing with our entry video. We did the part one. We're going to be continuing with the next part. So let's get straight into it. So let's do a little bit of recap of what we spoke about in the previous video. So we can be sure that we got everything we explained. Okay, there it is. We spoke about entry at points of structure. You can either enter at the previous support that turns resistance, or the previous resistance that started the move. Same thing with an uptrending market. Either enter at the previous resistance turn support, or the previous support that started the move. Now we also talked about the chart patterns that we look to enter. We are looking at double bottoms, double tops, head and shoulders, and inverse head and shoulders. These are the four chart patterns that we are looking to enter the market off of at these areas of interest. Okay, now when we find these chart patterns in our area, we do not just see a double bottom, we still wait for confirmation. Okay, our confirmations are after, let's say we're looking at a bearish example. Now we find a double top at a level of resistance. Okay, so say there's a double top here. Let me try to the double top here. Market came back to this level to retest the resistance. Okay, even after this double top, we'll still wait for confirmation. What's that confirmation? It can be, for a bearish example, it can be a bearish engulfing here. It can be an evening star formation here. It can be an inverse hammer here. It can be a close below candle below. You can take a screenshot of this for the bearish examples. What you're waiting for as your confirmation: bearish engulfing, hammer, evening star, and close below candle. This is how it looks like. So after this double top, we're waiting for one of those candle formations to give us the confirmation to get into the trade. So for the bullish example, if we have a double bottom or an inverse head and shoulder at our area of interest, left head, right shoulder, wait for our confirmation. What is our confirmation? Either a bullish engulfing, a morning star formation, a bullish hammer, or a close above candle. This is basically what we discussed in the last part. So now let's go into stops and targets, because it's one thing to enter the market, is another thing to know where to put your stop loss if you're wrong, and your targets, where to get out if you're right. Okay, so for this, I'm just going to go, instead of doing what we did the last time, I'm just going to go over some of the trades I took. That will be easier for me to remember and cite my examples off of. Let me go with the Euro NZD trade, and it will be easier to cite examples with these ones that are pretty fresh in my memory. Okay, so this was the Euro NZD trade I spoke about sometime in our Sunday swing, and I took the trade and I shared all the analysis. So Let me break it down, so we have a whole idea of context, then break down the entries and everything. Okay, from the weekly time frame, the market was coming down. It came here, it made a double bottom. If the market wanted to keep coming down, what would it do? It will make lower highs and lower low. So see high, low, lower high, lower low. This was not a confirmed lower high. Why? Because the market never took out this lower low. So it came here, it made equal lows, pushed up, broke above this level. Double bottom is a reversal pattern. Especially on a higher time frame. Broke above the neckline and it came back here to retest. On the daily time frame, scroll over to the daily time frame, the market was also in an uptrend, low, high, higher low, higher high, and came back to this point to retest this level. Now, where did I find my entry? Go over to the 4-hour time frame. You can take this level out. We're only looking at this level. This is the level that we marked out on the daily and the weekly time frame. Now, on the 4-hour time frame, the market came into this level, made one bottom, pushed up, second bottom. Now look at this candle formation. Over here you can see this bullish engulfing. This could have been our entry, but it was too close to the bottom. I wanted to see more momentum, so I waited for a close above candle. Okay, can you see how everything I'm teaching is tying to all coming together? So double bottom, I didn't just enter because there was a double bottom or because we had two bottoms and I just get into the market. Even after this bullish engulfing, this could have easily been our entry, valid. Okay, for me, I was trying to be more conservative, and I waited for a close above candle. After this engulfing, I told you guys I do not like to enter at the top of an engulfing. I waited for a pullback into this region and I got into the trade here. My stops underneath the level and my target at the highs. Okay, so this is a clear example of what I explained. Let me also cite an example from this Euro CHF. I'm still from the loss I took on Euro CHF. This is just to show you guys that every single is not going to work 100% of the time. No strategy has 100% win rate. Okay, you just have to know the rules, know what you're doing, and play the probabilities. It's always a probability. No one knows exactly what the market is going to do. So this on the weekly time frame, low, lower high, lower low, lower high, lower low. Market came and violated this high, broke above, and came down here to retest it. Go on higher time on the daily time frame, you find it was moving bearish, but now higher high, higher low, higher high, higher low, higher high, and it came back here to retest this level. I came on the 4-hour time frame, and what do you see? Let me take this current price action away to show you I watch for the exact same thing every single time. The market came back here in this region, one bottom, push up, second bottom, engulfing. I entered here. The exact same reasons why I entered the previous trade. Entered here, target above, stops underneath the lows, and look at what the market did. Pushed up, boom, pushed down and stopped us out. Why am I showing us this? I do not want to create an illusion that because you're learning this strategy is going to work every single time, or this strategy has a 100% win rate. You just need to know the rules, know exactly what you need to do, and play the probabilities. Sometimes you are going to win and sometimes you're going to take a loss. That is the reality of trading. So having said that, let us go and look into stops and targets. Let's make a system-based method of determining our stops and targets. Now, since most of you are just trying to get familiarized with the strategy, I want to go back to the Euro NZD trade. Okay, Since most of us are trying to get familiarized with the strategy, back to this trade. When we find our entry, when we pick our entry, market has come back into our area of value. He has given us an entry confirmation, double bottom, close above candle. We have gotten in. Where do you want to get out in case you are wrong? Where do you want to get out in case you are wrong? Now, I would advise you look for the lowest low of your chart pattern. If it's a double bottom, you look for the lowest low of the double bottom right here, and you take your stop loss 10 pips below the lowest low. 10 pips below the lowest low. You can make it 5 pips if you're more aggressive, but at least 10 pips below the lowest low. Okay, so this is 42 pips as the lowest low. This, your stop loss could be 52 pips. And instead of targeting highs like me, I have more experience. I am able to manage my trades more. But for you or for people who are just learning, it's always advisable to start off with a hard stop and a hard target. What I mean by that is you are setting a predetermined stop and a predetermined target, so that you can be able to track your trades. Okay, so what I would advise you to start off with is a 2-to-1 risk to reward. This risk to reward simply means if you risk $100, you want to make $200. If you risk $1,000, you want to make $2,000. If you risk $1, you want to make $2. So your stop loss 10 pips below the lowest low, your target at a 2-to-1. It means your target is double the size of your stop loss. If your stop loss is 50 pips, your target is 100 pips. No need to start. Just for starters, just stick to this time frame, or to this kind of like risk to reward. Okay, as you get more familiarized with the strategy, as you begin to understand, as you begin to make more successful trades, you can move your targets up, or you can use structure. Okay, but using structure, moving your targets up, is a more kind of like advanced technique. So starting off, so that you don't confuse yourself, I would advise 10 pips underneath the lowest low and 2-to-1 risk to reward. That's the beautiful way to start. Okay, in this if you're trying to learn how to ride a bicycle, you don't just give someone who has never ridden a bicycle, give him a bicycle and put him in front of the express and tell him ride. Okay, you have to find someone who already knows how to ride. The person maybe guides you, holds you, so tries to guide you so you wouldn't fall. The person already has experience. You wouldn't compare your own experience to the person's own. Me, I sometimes I use tighter stop loss and I target structure. I've been doing this for at least 4 years. I know the risk, I know how to manage my positions. But when you're just learning out, when you're just starting out, when you're just learning, it's important. I also went through this process. Okay, start out with a hard stop and a hard target. Stop loss 10 pips underneath the low. If you're more aggressive, maybe 5 pips, but always underneath the lowest low. Target 2-to-1 risk to reward. When you start to get more advanced, when you start to understand the strategy more, you can begin to look at structure to see, where is this market likely to go to if it keeps going in trend. Okay, but for starters, this is what I recommend. Let's look for another entry. Okay, this is AUDJPY. This is quite a messy one. Let me use GBP AUD instead. I think that one was cleaner. If I can see, these are trades that I took, so I'm able to recall off hearts. GBPAD is also a mess. Okay, but that notwithstanding, this GBPAD trade, let's break it down for the higher time frames, see why I got into the trade, and see what we can learn from it. This market was in an uptrend. Let me take you all the way to the weekly time frame. The market was in an uptrend. Let me use bar replay so it doesn't look messy. The market had broken structure on the weekly time frame. This was going from high to low, lower high, lower low. According to structure, this high was not meant to be violated if you wanted to keep going in this downward trajectory. Okay, the market came, it violated this high. So now I'm anticipating an upward push. Go over to the daily time frame. Also coming down, low, high, lower low. The market came and broke and closed above this highest high. So in this whole region, I've been anticipating this push. I think I caught one trade up in this, up to this point. Then the market came back to this region. So now we go over to the 4-hour time frame. This is where we're looking for our chart patterns. Okay, on the 4-hour time frame, look at this, a beautiful double bottom here, close above candle here, entry at the middle, stop loss underneath the lowest low. You can take this point here, 10 pips under. This is 67 pips, 67 pips, target 221. And look at that, boom. For now, for beginning, you do not need to start bothering about the targets. How do you just stick to these simple rules? Anyone can apply this, anyone can profit off this. You do not need to make it overcomplicated. You do not need to make it what it's not. These are simple rules that anyone can follow. Okay, simple rules that anyone can follow. I have broken this down. Look at this. Higher time frame is telling me the market is going up. Daily time frame, market is going up. Wait for the market to come into our area of value. Wait for our chart pattern. Wait for our entry confirmation. Enter the trade. Stop loss underneath the lows. Target 221. Very simple, very easy. Anyone can do this. Okay, this is everything. When you have been able to do this, when you have been able to master this, you can begin to refine and add your own little personalities into all of this. You can decide, oh, I do not want to go 10 pips below, I want to go 5 pips. I don't want to go 5, I want to put it directly at the lows. I want to put it at an area where I believe the market will not get to. These are all your, but for starters, stick to these simple rules. When you are more seasoned, you can say, oh, I don't want to go for a 2-1, I want to go for a 3-1. How can I make it so that my risk to reward is better? You can always improve on these things. But for starters, stick to these simple rules. It will help you immensely. Okay? These are simple rules that you can follow, that anyone can follow, and you'll see great results. So I believe I'm not trying to make this video extremely long. This is the bread and butter of everything that I do. This is, I'm currently in the Euro CHF trade. This is, maybe I'll just break that down here. I took this loss last week because the market, after this double bottom, the market spiked me out. But come and see what the market decided to do. Created a left head, right shoulder. After this engulfing, I entered again. My stop loss underneath these lows. My targets at the highs. The trade is still playing out, as you can see. So this is what I do. I am not trying to teach or explain or try to say something that I do not do. I literally put my money where my mouth is. I literally do this every single day, every single week. So I assure you, if you stick to these rules, you are going to see results. Okay, stick to these rules. And if you have questions, if you have confusions, whatever it is, leave them in comment sections. I always read the comment sections. And send me a DM. I leave my Instagram handle in the description of the video. Send me a DM. You can always interact and see how we can make your trading better. I'm just trying to help. I'm trying to be the guy that I wish I had when I was coming up in the market. So I'm not the best trader out there, but I think I know a thing or two that could help one or two traders. So that's literally what I'm trying to do, trying to share knowledge. So practice this, and I'll see you in the next video when we begin to talk about psychology, risk management, money management. So that'll be the next part of this series. So I'll catch you guys in the next one. Cheers.